The U.S. government just handed $2 billion to a technology most people can't even explain and quietly took ownership stakes in the companies receiving it. Not a loan, not a grant with strings attached, equity. The government is now a shareholder, and while most people were focused on the stock market noise last week, this announcement dropped and barely made headlines. That's exactly why we're talking about it today. I'll dive deep into what's exactly happening right now and how you can get into this as a regular investor through 3 ETFs. So leave a like, subscribe. Let's get into it. So, here's what actually happened. On May 21st, 2026, the Department of Commerce announced $2.013 billion in federal funding to 9 quantum computing companies under the CHIPS and Science Act. IBM alone received $1 billion and is using it to build America's first dedicated quantum chip manufacturing facility in Albany, New York. Global Foundries received $375 million, and publicly traded companies like D-Wave, Rigetti, and Inflection each received around $100 million. The government is literally taking minority equity stakes in these companies, meaning they have a financial reason to want them to succeed. That's not something Washington does casually. When the government puts skin in the game, institutions take notice. And when institutions take notice, capital starts to move. Now, before we get to where you can position yourself, you need to understand what you're actually investing in, because if you can't explain it simply, you can't hold it with conviction when it gets volatile. So what is quantum computing? But before that, if you like more content like this, make sure to hit that subscribe button so you don't miss out on future videos like this one. And I hope you enjoy the rest of this video. Regular computers process information in ones and zeros. Every decision is binary, on or off. Quantum computers use something called qubits, which can be on, off, and both at the same time. That property is called superposition. Think about navigating a maze. A regular computer tries every path one at a time until it finds the exit. A quantum computer explores every path simultaneously. The result is processing power that doesn't just beat classical computers, it makes them look prehistoric for certain problems. Here's a real example that'll put it in perspective. In December 2024, Google's Willow chip solved a mathematical equation in 5 minutes, a calculation that would take the world's fastest supercomputer 10 septillion years. That number is so large it's longer than the age of the universe. And here's the honest part. That specific test had no commercial application yet. But what it proved is that the error correction problem, the thing that's held quantum back for decades, is now being solved. And that is what changed the investment thesis. So, if it's not commercially ready, why is Wall Street moving now? Because Wall Street never waits for the finished product. They fund the infrastructure while everyone else is still Googling to find out what's going on. Think about the gold rush. The people who got rich weren't always the miners. It was the people selling the shovels, the picks, the denim pants. Levi Strauss didn't mine a single ounce of gold, but he built a company that lasted 150 years. The ETFs we're covering today are the shovel sellers of quantum computing. You don't need to pick the winning quantum company. You just need to own the ecosystem around it. And the numbers back this up. QTUM, the first quantum ETF, returned 50% in 2024 and 37% in 2025, nearly doubling the Nasdaq's gains both years. In 2026, it's already up over 36%, while the Nasdaq sits around 17%. That's not hype, that's price action. Money is not waiting. The shift from quantum is theoretical to quantum is fundable infrastructure happened fast, and most retail investors are still catching up. The 3 ETFs. The first ETF is QTUM, the Defiance Quantum ETF. This is the OG. Launched in 2018, it's the oldest and largest quantum ETF in the US, and it just crossed $5 billion in assets under management. The same week, the government announced its $2 billion investment push. That timing isn't a coincidence. It holds about 87 stocks across semiconductors, memory, networking, and direct quantum companies. Names like IBM, NVIDIA, Micron, IonQ, and D-Wave all sit inside this one fund. It carries a 0.40% expense ratio and holds a 5-star Morningstar rating. This is your foundation play. If you're new to this space, or you want broad exposure without picking individual winners, QTUM is where you start. Think of it like an index fund for the quantum ecosystem, diversified, liquid, and battle-tested. The trade-off is that it's not pure quantum. About 15 to 20% of holdings are large-cap tech names that add stability. For beginners, that's actually a feature, not a bug. The second ETF is WQTM, the Wisdom Tree Quantum Computing ETF. This one launched in late 2025, and it tells a different story. Where QTUM is broad, WQTM is focused. It cuts out the large-cap tech dilution and goes specifically after companies building quantum hardware, quantum software, quantum services, and post-quantum cryptography. It's a purer bet. Here's who this is for. If you already hold an S&P 500 index fund or broad tech ETF, you already have NVIDIA, Apple, and Microsoft in your portfolio. Adding QTUM on top of that doubles up on names you already own. WQTM gives you targeted quantum exposure without the overlap. Higher ceiling, but more volatility. Smaller assets under management means less liquidity and wilder swings. This isn't your starter position, it's your add-on once you understand the space. The third ETF is CQTM, and this one is the most psychologically interesting because it flips the story completely. The first two ETFs are about building quantum. CQTM is about protecting against it. Here's the angle most people miss. Quantum computing doesn't just create opportunity, it also creates a threat. Today's encryption methods, the ones protecting your bank account, your medical records, government communications, they were built for classical computers. A sufficiently powerful quantum computer could eventually break them. Governments, banks, militaries, and hospitals know this, and they're spending money right now to upgrade their security infrastructure before that day arrives. CQTM focuses on cybersecurity, post-quantum encryption, secure communications, and defense technology. This is national security wrapped in an ETF, and the spending in this category isn't speculative. It's already happening. That makes it the least volatile of the three and the most grounded in near-term government contracts. Think of it this way. QTUM and WQTM are offense. CQTM is defense. A complete position might have both. Risks, the honest part. Now, here's where most finance videos let you down. They skip this. We're not going to do that. Risk number one is timeline. A McKinsey survey found that 72% of tech executives believe fully fault-tolerant quantum computers, the ones ready for real commercial use, won't arrive until after 2035. This is a long-term play. If you need returns in 12 months, this isn't your vehicle. Risk number two is that these ETFs have already moved significantly. You are not getting in at the ground floor of 2020. You're getting in during the infrastructure build-out phase, which is still early relative to mass adoption, but don't expect the same returns as someone who bought QTUM 3 years ago. Risk number three is volatility. Many pure-play quantum companies inside these ETFs have little to no revenue yet. When sentiment shifts, these names can drop hard and fast. Dollar-cost averaging, putting in a fixed amount consistently over time, beats trying to time a perfect entry every single time. The question isn't whether quantum is real. The question is whether you can hold through the turbulence to get to what it becomes. So, to wrap this up, the government just committed $2 billion and took ownership stakes in quantum companies. QTUM just crossed $5 billion in assets. Institutions are already inside these positions. The narrative is being built right now. And narratives, once they start, tend to run further than most people expect. Oil, internet, mobile, AI. Each one had a moment where it looked expensive, overhyped, and uncertain. Each one made people wealthy who held their conviction. The only question left is what you do with the information. And if you want to learn more about investing, make sure you watch this video as well.